we're back on a Tuesday after a holiday in a very sweet spot. What's going on, everybody? Welcome back here for a Tuesday. We're here every Monday, Tuesday, and Thursday, 12 noon. Hope you had a good Labor Day. I know I did. Big shout out to the chat. Thanks again for showing up, everybody. It Flies, Argo Glass, Toad, David, Grow Green, X03, Neil Ward, and the rest. Paul Brilliant. What's going on? What do we think about this? Anybody that knows the harmonic pattern framework, knows the check back, how do we feel now versus, say, 2-3 days ago, 5 days ago? A lot better, right? A lot better. We're back into return phase. I don't know. I think Thursday I was kind of holding my breath, maybe half the session, like if it breaks down, it's done. But it hasn't. Still holding, and I would say we're looking at this chart of Ethereum 1430 as your make or break for the whole deal. Crypto, everything. Absolutely. A lot of progress. It's taken more time than maybe we expected or wanted. But I think we can shift back to saying, okay, Ethereum in the return phase with some patterns to go retest, or at least one, with the possibility of getting back. Let's just take it in chunks. Let's just take it in chunks and let's look at an attack on the prior peak from August. That was around 2,000 and change. You're trading almost 1,700. You have to get a close above 1,650 for the whole deal. Ethereum, everything. Ethereum's leading this. Bitcoin wants to go to sleep for a long time. I think this is where we're going to see the shift away from Bitcoin to Ethereum in terms of true growth crypto over store of value. It's showing that's what the Bitcoin chart says to me. But at least for now, you go back into the return phase for this Ethereum bearish bat. Larger consequences of a full retest of this bat pattern will be dealt with at a later date. Right now, let's just take it in chunks. Let's do this chunk. Okay, right back. Let's see, can we get back to retest there? The prior peak of where the pattern completed. Also, take a look at your indicators. What we were looking for last week materialized over the weekend. Amplified RSI got to the 50 and now poked through. Very good sign for continuation. Harmonic Strength Index got to the 50, now hitting the overbought. If we're going to see some fireworks, folks, it has to be over the next 2-3 days. We need to blast into this zone. We need to see a couple of big days in Ethereum to come up and not just give us a nominal test. That would not be a good thing. Where if HSI kissed the overbought and then reversed. No, we need to see this thing move in. So another 2 or 3 days and then come out at a higher high would be what you'd want to see. Next 24 hours will tell you how high that's going to go. We're going to get the full move to retest that pattern. I don't know. Have to watch it. But a heck of a lot better than it was, a few days ago. And I think a lot of people were kind of looking at me like, what are you talking about? There's some check back here thing. I've laid it out why this check back, why this HSI, the bearish pattern against the big bullish pattern. Look, this is just because it's a pattern, a bearish pattern doesn't mean it's the end of the world. Reaction, absolutely. And I think we saw that in our Ethereum and our total 1, total 2, total 3 indices for crypto. But we're now laying over the harmonic pattern framework, which says reaction first, come back, give us a trigger, do the return phase, to retest the pattern if we're going to get a more powerful bearish signal. It's going to happen on the retest. Okay, there you go. Neil's asking the question. I know everyone's kind of got their head turned around. Look, the crypto pumps are just reaction. Neil's saying, so are we to carry on with this crypto pump or break down and make new lows? On Thursday, I said if you close under 1430, yeah, you go all the way down to probably the full 1,000 retest. It did not look good on Thursday, but it was holding. Each low, each day made a higher low. That's something I noticed over the weekend. Still took an extra 3 days to get out. Look, I think you're in reaction after reaction. Okay, there's no moon phase. You're looking at reaction to reaction. We are in a big type 1 reaction off of the crab that started down here back in June. That type 1 reaction for Ethereum ends at 2486. So whatever you do, okay, we could get to 2486 on Ethereum, and that could be a massive sell signal. It's just that along the way, we decided to Ethereum formed another small bearish pattern in the zone, which said, okay, I want to take more time. And I want to do my 1-2 dance. I want to do the type 1 reaction off of Ethereum from basically like 1900. Target 1 was 1590. This decided to go to 1430. Even after we triggered HSI. I mean, Harmonic Strength Index coming through like a champ in this market. Crypto's just been amazing, Harmonics. Crypto, it's one of the reasons why people are like, why do you spend so much time on crypto? Because the harmonics are insane in crypto. And the 24/7 action gives you plenty of opportunity depending on your market. We'll look at some of the coins, but again, even Ethereum as a swing trading vehicle is phenomenal. I mean, this is better than a stock. Swing trade Ethereum over the course of, holding it for a week or two or a month or something, because you're getting beautiful 20-30% swings. But this is all reaction stuff, okay? And this kind of intermediate bearish pattern said more time off the bullish pattern. Now, after doing that, finalizing the reaction, we go back into the return phase, retest this pattern on Ethereum. Look, it looked ugly last week. It really did. I was just saying, look, this has to be the low. That has to be the low. 1430 cannot take out that low. And now we just need to get a close above 1450. A lot going on. Listen, the macro, Nasdaq, S&P, Dow do not look good. That does not look good. And we'll look at those a little bit later. But they look like they're in massive return phase. They look like they need to retest the June lows. Certainly that's going to put pressure on crypto, but maybe crypto is trying to do some things with Ethereum and all the stuff that's built around all the news that's coming out against Ethereum or for Ethereum. We'll see. Clearly this will be the month. I would still say sell the news. If that happens in a week or 3 weeks, it's probably a sell the news event. But for right now, we're in return phase on the pattern. And we'll see for how high that can get back up there to retest that bat. That's what I'm looking at. That's the immediate segment, the immediate reaction I'm considering. So if you wanted to know where I thought if it could happen, where could the major dump be? It could be a corresponding rally that comes up and then goes down from there. Why? Because it would be a type 2. It would be the secondary test of the pattern, which by definition is where we look for our reversals. We see a pattern, no biggie. We know that's a reaction. We treat that as a finite move, 30 bars, 60 bars, whatever it may be, but usually 30. And then if it doesn't follow through or continue within this 30 window, it's probably done. And that's what that is. Look, here's the total indices. We've talked about these as well. They did the same thing. Total 1, total 2. Look, they all had total 3 is probably the best one of all. Look, bat pattern back in mid-August, which basically capped the June rally. The June rally was, as we remember, the June 21 rally right here. Total 2. That excludes Bitcoin and Ethereum. But you took your time to go from there to form the bat. I mean, it wasn't fireworks, but nice stabilization. You ran into another bearish pattern in a bullish zone, which means you're going to take more time. For total, this is total 3. So now you've parked yourself right at the second target of the pattern. That's around 371 billion. And what we look for is just end of the reaction, which it's trying to do right now. Okay, you broke out. You need to start going up on your total 3. That's your altcoins, your T coins, your S coins for this return. If we're going to get a big dump, it's going to be on the retest of the pattern or slightly above. That's why I don't think this is the place where we dump. And all of these segments are to be treated as reactions. Think of it that way. What does that mean? Well, you have defined targets, tight stops, tight management. There's no mooning. No mooning to be considered. You're not going to be like, oh, it's just going to hit that level and then just go forever. No. Also, confirmation, please. Keep an eye on all of this. This is just getting started, and there's been nice moves in between. Some of the specialty ones that we've talked about that have come back, some of those real crappy coins that we love, and we talked about like this Anchor. All right, just following type 1, type 2 on perfectly. I mean, perfectly. And so here's that deep crab. We talked about this. Go back to the sessions in June that we talked about this with the confirmation. Took its time, ran from 2 point whatever, 2.4 to 5.4 and a little bit and then some to target 1, which is what we targeted to do. And then right back down after forming a bearish crab. I said this last week, I'll say it again. This bearish crab will help the return. Why? You've got to retest that crab pattern eventually. Okay, you're done with the reaction. And not only are you done off of that bearish pattern, you're retesting this crab pattern with your XA level at 376. You're 356 now. So if we were to remove the bearish pattern and just treat this as a type 2 off the bullish pattern, this is the place where we look. And this is also the spot where, by definition, harmonic pattern framework, we're looking for target 2 now. In the same way back here earlier in the summer, we were looking for just target 1. Now we loaded up target 2. It's a heck of a move. Listen, everybody, really quick. You need to get over, especially the new people, because I've received more emails. And I want to welcome the new people, but you have to become a basic member. People have asked me, where's this, where's that? All of the information is on the basic members page. You just go to Harmonic Trader, register now. And again, I have to review this because I received some emails. You send your TradingView username, not your email, TradingView username to hpc@sr-analyst.com and to get just one 14-day trial. The other platforms are all there, HPC Pro. Get the books. A couple people asked me about the books. We give away a couple copies on Thursdays. I give away this book, Volume 3. Okay, maybe I'll do a Volume 2 giveaway someday. But that's a great book to look at as an overview with all of the patterns, But the advanced things like type 1 and type 2 and confirmation strategies, okay, look at all that stuff towards the back of the book, please. Really critical that the type 1, type 2 assessments, the confirmation strategies we talk about, you understand, because that's how we get to where we are now with these kind of setups. So do follow that. What's going on? Hey, what's up, crypto hoarder? Just see you sneak in here, you sneaky guy. Catch you in Vegas in a couple weeks, my friend. And those that are going to Vegas will have an announcement probably in a few days about what we're doing there and more details. Looking forward to it. I'm all set. I hope those that are ready to go are ready to go. Couple more. Let's go to Bitcoin. Of course, we haven't even looked at this. Look, Bitcoin, it does not look like it's doing much. It's not a place I would want to be, really. And again, this is where maybe Ethereum does take over. But Bitcoin's broken out of the downtrend since April. That's okay. Your larger downtrend, go back to the all-time high, you still have work to do. This is probably one of the points of issue that's going to happen until you get to the right of that downtrend, which at 20,000 is going to take until mid-October to get out of there. I don't expect much. I just don't think Bitcoin's the place to be looking for bigger moves. And even if it did a big move, that would be the first big move that I would even consider before even saying time to go back in. Something's going to happen in that space. I just don't see it. It needs more time. It's different than, say, something like Binance Coin, which we have discussed why this is so critical. Here's the Binance Coin chart. Off the all-time high. Look, this is where you want to be as a starting point. That's the all-time downtrend. Now get me something to the right of that downtrend down here. We never got down to target 1. This is another setup where you've got a pattern or back-to-back patterns. I think let's get the other. There you go. Here's the FTX chart. The deal on Binance Coin is a simple alternate bat, then went back to back, bat to bat, alternate bat, bullish. Did not get to your target 1 at 382. You did a whole lot of bumping around, and now you went to a bearish pattern that 256 on Binance Coin, it should be the floor. Now we're going sideways where you have your first bullish HSI since that pattern. Okay. I still say Ethereum's a better looking chart than even Binance Coin at this point. But I'm keeping my eye on Binance Coin, sure. A whole lot. Yeah, a whole lot going on. Here's Cardano, which tried to do a move off of the low 40s floor. And not much. I mean, again, Cardano put this in the category like Bitcoin and a lot of those other ones where you go off the all-time high. Okay, they got to get to the right and give you a signal to the right of that downtrend that started back in 2021. You're looking for a bullish signal to the right here as a sign that this is not only this broken trend line is a new uptrend, but you're going to get something to launch off of. If that's 45 cents or it's 35 cents, we've showed this before. Basically, where did it get to the 886? Right at 41? Yeah. Off of the multi-year retracement. Generally, that low 40 level is going to try to be a floor for Cardano, but there's nothing here. I'll show you something that caught my eye recently. Here you go. Algo Just not, doesn't seem like it's doing much, but this last, much like a lot of the last HSI triggers that happened in the end of August, it's trying to stabilize there. Doesn't look as great, say, as maybe some other massive charts. Here's another big one. Here's one that did, it's definitely a T coin. You know, it doesn't look like it's doing much, but this is just loop ring. And we have a big pattern, massive pattern, and then we have this smaller pattern that just did 2 of 2. I thought this was really interesting. I do find that in the crypto spaces, when we identify these big to small relationships and they still adhere to the type 1, type 2 framework, you want to be there on type 2. So now we have a small pattern inside of a big zone that is at 2 of 2. So loop ring, a heck of a lot better spot than it was a couple weeks ago. We said this would be a reaction to 46. Came all the way back down. 35.35 is the official point where XA structurally it's a type 2. So by definition, look, if we're going to look for a monster move, it starts to the right of that trigger. And that's loop ring LRC on Coinbase data feed. But structurally, and this is one that I will follow, it's kind of like Anchor, where it doesn't look like much, but you've got harmonic, from a harmonic pattern perspective, you got everything there. Keep an eye on that one. Some of the other ones. Here's the sandbox. Okay, another big pattern, small pattern. So this is a early. There you go. All this big consolidation stuff. You got your first small pattern. Binance data feed. So I think this might take a lot more time, but at least it sets itself up where you're probably scraping the low end of the zone. Look for something like this over the next few weeks. Come back down. And then you get the 2 of 2, where that would be the place where then larger things can happen. Keep an eye on it. Keep an eye on it. See the market's falling off. Nasdaq's selling off again. We'll go to there in a second. One or two more. Where is the... Oh, I want to talk about Monero. There it is. So Monero, it's got some longer term things going on there, but this is another 2 of 2 situation. This is the chart I wanted to bring up on Thursday. Okay, I'm looking for this to come back down, maybe have a secondary test of the XA level. We had this bearish HSI signal. It's a beautiful butterfly that completed back in January. Went to above target 1, all the way back down for the return phase. Perfect. Okay, had to do a reaction, but came right off the hop. I mean, that was sweet how that held. But longer term, you're still in a type 2 here. No confirmation just yet. I mean, you would want to see HSI trigger. That never hit. Came so close. All right, just keep an eye on this back down at 135, because a lot of these are setting up to come back. If they haven't done it yet, they're going to come back and have a secondary test of the type 2 zone. That's where the larger things can happen. I mean, it just, I think Zcash is, doesn't that have a bat pattern? Thought that was an alternate bat here. Not really. Not really. That's Zcash. I don't, maybe just off that all-time 886. Like this. even though that seems so wicky. It still works out. Your all-time 886 is around 59 bucks. And a lot of them have done this. My point is that we're looking for the triggers that are back down, retesting these all-time 886s now with other smaller patterns, daily triggers. This is what the area you want to target. So maybe 59 on Zcash. There's one other one. I think it was this synthetics. Yeah, massive. Look, there's synthetics. A massive weekly bat pattern. The XA level was around 359. First confirmation came in down here around $2 roughly. But I know the daily is doing a return. Yeah, there it is. So daily got a big pattern on the weekly. Software is kicking out after a beautiful back-to-back combination here. Bullish pattern in early January. Perfect type 1 reaction. Came all the way back down. Retested the zone. Top level was as low as 145, which I think was the exact low there. But really, the meat of your confirmation you'd be looking at around 229. This is still a type 2 because that's type 1. All right, and it's taking a lot more time. I would look at this thing. It's kind of like this. There's your 1, here's your 2, and you've broken out of the downtrend. And this is the first signal to the right of that downtrend. Sometimes it's difficult because we're looking for the immediate first signal absolutely in the target zone, and then it goes sideways. And that can be frustrating, but that happens on the type 2. You would consider this really the end of the return phase, but we're looking for the trigger down here. And this is a secondary trigger. 275 can hold for synthetics. And you can get above these prior highs. That's really constructive. I mean, that's something like this, and then try to develop something that then gets you to go out of this hole. You could say that downtrend that failed, or we could say, okay, this attempt failed on the first test. Yeah, it did. I mean, exactly off the hop level, which is insane. But there's the first confirmation since then. And I'm saying take another shot. Take another shot. This is another 2 of 2 situation. We've been following through those that have been massive. Let me finish up with Solana, folks, because like a lot of these, what you're looking at is the first trigger after the all-time downtrend. This bear market downtrend has been violated. So Solana, that's roughly around 32 bucks with the bat pattern. That's daily. Here's the 4-hour. Okay, look at it this way. I think even in the worst of scenarios, Solana can come back up and retest the bat one more time. Even if it bangs between 30 and 40 or 45, that's a heck of a range. And that reminds me of, this was the one I really want to follow up on. Ethereum Classic, on a percentage basis, has been making great moves left and right, but go on the 4-hour chart. Look at these patterns. So another one that I'm watching, if crypto's not going to do much, like if the Ethereum announcement or there's zero follow through on this Ethereum run, we'll see it in the likes of Ethereum Classic, and it will fail up here on that retest. Let me bring up, where's the daily? There you go. Keep an eye on that. That could still try to make a run to retest that bat pattern. I want to see what the HSI does this week. That's Binance on a daily. It's hitting today, but it might not trigger for another day or two. But this is part of the whole Ethereum. I think money flowing to Ethereum as a part of the merge or whatever they want to call it. Ethereum number 2 or 3 or 5 or whatever. But follow this one. If you're not following Ethereum Classic as like one of your top coins to be looking at, I would, because it's going to tell us a whole lot of what's possible, or if this is just like a one-off thing and Ethereum's going to maybe pop back to 1900 and then roll right back down. Now let's get really quick over to the larger markets. Nasdaq, S&P, Dow. We were just back down at new lows for the session and then rallied up. We're down 100 now on Nasdaq, but the last week has set off, you know, a real acceleration of this return phase that we talked about, reaction phase of the Gartley, the bearish Gartley. Probably the diamonds are better to look at, where we had some patterns towards the end of August. Come on. I don't know why it's taking so long. Let me go back to this one. And they essentially accelerated into the end of the week. There you go. There's diamonds. And looking for a retest of all the bullish patterns that at the end of June. Many situations have bullish patterns completed again around the 21st of June or the 30th of June. Had a nice reaction into early August, rolled over, and now going for the retest. Let me bring up the SPY, S&P 500. Because I think when people talk macro, really what they're referring to are the big cap S&P 500 sector stocks as a gauge for what the larger economy is going to do, or how the companies are going to respond to what's going on in the economy is a better way to put it. But this was an overextended bat pattern. Hop level 423. We talked about this. And I mentioned last week 381 as target 2 off of that bearish pattern should be the maximum limit. I mean, again, we would retest not only the second level off the bearish pattern, this bat pattern that completed, what, August 2nd. But then we come back, and again, all the support levels, 382, okay. And what was the other? There was another one. There was a shark here. A couple of ABCDs, and I think there's, let me bring this in here. There was something else there. But 382, folks. You're 391 at the moment. So this is close, and you break under that 381 level or even anything under 380, the likelihood of the June lows failing and the hop level failing increased dramatically. And it would have to happen this week. Here's the indicator picture, and this is going to tell us a lot. Today, tomorrow, you know, we're down, what, 40 on the S&P? No, sorry, we're down 10. We're down 10 on the S&P. Okay, but if we sell off aggressively into, say, Thursday, when we come back and we are below 380, that's 3,800 on the index, and amplified RSI right there is still oversold. It stays in the oversold, or even worse, harmonic strength index decides to go back down. If we slide here, this is the exact spot, and I mean exact, and you folks know I like to be exact. This is the exact spot where it should fall apart. In the next 48, 72 hours, if the whole thing's going to break down, you break it down here. You break it down where you go back into the zone, you stay oversold, and you expand lower. Okay, if not, and all it would take would be literally a one-day reversal, one bullish candle, maybe a close above a prior day's high. Okay, then that would say, all right, it's going to stabilize. But this week is, you've entered into a spot where You're so close to finishing the type 2 return, retesting those patterns from June, finishing this reaction that started in August, that these indicators should turn up. But that's not what they're doing. They're back in their oversold zones, getting deeper oversold. When you see that, it really is where things can kind of break loose. It's a tough read, but that's where you are. Let me bring up the index. Take a look at this. Oh, here are the Dow diamonds. There's those Dow diamonds, the deep crab from June. Beautiful type 1 reaction. And then ever since we topped out at target 2, rolled over, nothing. I mean, straight down. That's straight down. Even there's a couple of up days, but for the most part, it's straight down. Even today, we broke down to new lows for the move. The 1618 is down here at 302. And this is the zone. You have to hold that zone. What are the indicators doing? Not much. Again, another situation, and this is the harmonic pattern collection for eSignal. So we have standard RSI with, this is amplified RSI, this is HSI, and this is standard RSI. And so look what standard RSI is wanting to do. Just trudge lower. Standard RSI has given you nothing. Down like that. And I would look for that to terminate under 30. You need to get oversold, which is under 30 on the standard RSI. You're not there yet. Definitely with the diamonds, it's not going to be as volatile as, say, as Nasdaq, but this is a part of the automatic return. We talked about that on Thursday. Once you get into that phase and you get 2/3, 3/4 of the way down, bank on it. And if it's really bad, and this would actually be a nice scenario for a type 2, you just collapse. Maybe we collapse over the next several days. I don't know. We're going to see how we shape up today. But maybe over the next few weeks into October, we come down here. By definition, that would be a type 2. That's where we would anticipate a long opportunity. Think of it that way. All right? Not to get everybody frustrated about the fact that, yeah, this is a fluff rally from June, and no kidding, Scott, this is definitely going down. Well, the macro, yes. But where are you? What's the harmonic pattern framework telling you about something so just enormous and significant as the Dow Jones Industrial Average? That we're in a type 2 phase, clear pattern. Reversals happen on the retest. We just need confirmation when you get down here, you're not down there yet. And it's until we hit these numbers. All right, yeah, we're going to have to be patient with this and let it fall into that zone. It's just, that's the way it is. Here's what was the other one? I think the XLF, the financial. Check out this. Here you go. XLF, this is the financials, the select sector trust. All right, yeah, showing a 5.0 here. I'm more interested in looking at, hold on. Huh, there you go, back-to-back shark. Amazing. We had a deep crab, another one that bottomed in June. Okay, set up, perfect reaction move. Oh, that follows the framework in ideal fashion. Come back up, go to target 1, there's HSI, triggering down, and we would look for the full retest of that zone. Do we come back? I mean, here's the thing. We're at target 1 of the shark. Do we come back for a retest and then go down? That's a tough situation, but it all depends on what HSI does over the next day or two. And it looks like we're heading lower. It doesn't look like we're registering anything yet. Maybe by Thursday, but look, we're still heading down lower. Your standard RSI indicator, that's well under 50. That's trending lower. And then amplified, that's our juiced proprietary RSI indicator. Yeah, that's hitting oversold now, but would still take a day, maybe 2 days to even get out, and at least several days to get back up above 50 where it could do something. So no doubt, pressure is still down on these markets. Price action. Let's keep an eye on that, folks. There's a lot going on that can be scary. There's a heck of a lot of narrative that's out there. I want to break it down to the framework. Tell me what the framework is doing. Because, sure, by definition, isn't this the place we want to be anyway? If you want to be long and you want to be in the market looking for opportunities, it's financial sector, XLF. It would be down here on the retest for one of the biggest daily swing opportunities in the last couple of years. That's a better way to think about it. Sure, you're down now and you're in a reactive return phase, but this is your support, and you're talking major support, where after the throwdown in June, look, a lot of bad would have to happen for this thing to be blown out. For that full XLF crab pattern, it would fall apart, and it would probably fall apart into the zone. So we would know anyway, but we're anticipating down here 30, 30, 70, anything under 30, as low as 27.76 on the hop level for XLF. And go to the weekly time frame. Again, if you're thinking all hell's going to break loose, we'd still, in the weekly, same pattern. It's even clearer. Looks like this. Yeah, that's even cleaner. It's a lot cleaner. But we are in clear return phase. And I wouldn't, something like XLF, I would not touch it until we trigger 3070 with an HSI down there. So when it gets ugly, or if it gets ugly over the next couple of weeks, remember where you are. That's the point. Reaction phase over. Reaction phase that started in June ended at the end of August. We quickly rolled over. Now we're second week of September, second full week trading September. We're rolling back over since topping out. I guess that's like third, fourth week of August. You're there. So if we pop another 2-3 weeks down into the zone, don't be surprised. But it's merely on the return phase. Definitely a lot of structure and framework that can explain a lot of things when the rest of it seems crazy. And that would probably be my suggestion, to follow those major markets, follow those major patterns that are clear like this, and go with it. And here's another one. And we talked about this last week. But I think because the big market cap, everyone wants to jump on the narrative. It's Tesla. All right, where are we? This is weekly. Type 1 reaction, broke the trend line. You're on the return phase. That 274. But the 886 is at 208. This could happen quickly. You could get, maybe we get a couple of bad days later in the month. Just remember that this is where the opportunity is, the return. After the return, and give you some kind of confirmation. These are some things to think about on a lot of different markets that are shaping up like this for September going into October. I personally just think that we will see things will melt down before they get really crazy. If they're going to get crazy, things will melt down in a way perfectly within the framework that'll tell us, oh, okay, no, Tesla's not gonna, it's gonna do a deeper retest. You know, if things are gonna get really ugly, Tesla will run for the hop because it violates and starts breaking down here in the next 2 or 3 weeks. That's why this rollover, where we are today and by Friday, will give us an indication of how this is going to drop into the zone. And you still have what? Well, that's a sizable 20% drop to get to 208, but that's where you are. It's just taking time. And I think that's time's up. Definitely time is up. So be aware of that, at least for the folks that have been here all summer. We've seen a lot of great things take shape. Those reactions that terminated at the end of August and the whole rollover us in crypto and other things are showing us what to expect, but how to interpret the time, the amount of time it takes for this stuff to really define an opportunity. And stuff like Bitcoin, we've identified that as being, you know, kind of a market to avoid, versus Ethereum, even in these tough times, has been pretty strong, even despite the last couple of weeks. And still, I think a lot of opportunity there. And you go to some of those other smaller coins that have followed the framework in ideal fashion. Look, it's about the only way I feel like you can navigate relatively choppy price behavior. I mean, this, even Tesla moved from 208 to 300. That's all post-split or pre-split, excuse me. But that's not any kind of major trending move. That's actually chop behavior for a tech stock in a year like this. So I think just keeping the perspective, that's where we've been most of the year, and we still will be in this kind of segmented consolidation phase. You know, segment up, segment down, retest, then maybe set something up later here in the fall for Tesla. But it's I think it's just tough to see as that process is unfolding. You go, here's your reaction phase, then you get into the return phase down here, and then your larger reversal can begin over here. But naturally, hey, we want to be long Tesla. I mean, just that's the narrative. Get long Tesla. Tesla's going to the moon, whatever. Well, if it is, I'm still waiting for the type 2 return and wait for that reversal to get confirmed, which would also be a measured level. Even if it's a reversal, look, target 2 is the objective. So I don't have a moon psychology here. I'm thinking, okay, get back down there later this fall, set up for your target 2 move, that kind of a segment. If you keep that way, keep that segmented, measured approach, I think it helps the brain from getting lax and just like slipping into a perma moon phase where everything you think you're going to get into is going to go 5x, and then you can't handle it because you don't have the right perspective on. Believe me, I've done it. Yeah, listen, there's a good comment. Yeah, the debt markets are selling off. I don't know if I would. Maybe you're in a different country, but you know, depending on what your currency is. Look, the larger meltdown, if it's going to take shape, okay, it's going to be on this return phase. Dave's asking, is Scott bullish or bearish? The sideways stuff is killing me. Dave, I think that's a great expression of probably how a lot of people feel. You know, the market's in a sideways to down trend. We have clear patterns that gave us a bullish reaction. They hit their targets. They're coming back for the return phase to retest those patterns where they are. Most of the ones that completed in June and July. So you're in reaction mode. I think maybe that would help to instead of considering, you know, is it bullish or bearish? Right now, it's in a return retesting. You're going back down, return phase. The bullish reaction is over. So you go back down to bearish consolidation. Go back and retest that pattern. So there's no opportunity there, but I'm lining it up saying, look, you expect this thing to retest the pattern. For now, immediately, I would say bearish. And I would say that this is, in the very, very short term, going down to retest that larger zone. Until it does, or something dramatic changes, I will wait for that retest. That's where we are with a lot of those patterns on the markets. Crypto, the larger trend is still down or still sideways. And that was my comment about, even this segment was a really nice tradable segment, but that's about it for now. Again, you come back down and retest that again. Yeah, and it explodes, and the large long-term trend continues where you go to new all-time highs. For how we look at the framework, it's on the retest of the pattern. And you're not there yet. And that's why, yes, it can be very frustrating. That's part of the whole trading challenge, is being able to adhere to your plan, wait for your signals to come together. Where we've been over the last 3 months, okay, especially the shellacking the markets took in the first 6 months of this year, was just an initial flex reaction. And longer term, it could easily take to the end of the year to resolve all of this bearish momentum, maybe into next year, where if you're bullish and what you're saying with bullish is like, hey, I expect the markets to go to all-time new highs within the next 12 months. Yeah, I'm not saying that. I'm saying I expect a retest of these June lows, and let's take a hard look when we get down there. So where we are now is not a bullish space. Again, I would say bearish consolidation, but the whole thing's been chop since a year ago. There you're basically where you were a year ago. That's where that Tesla is, and the rest of them. More time. I think it helps to really frame it out. Reaction reversal. Think of it as consolidation requiring more time. If we're down on that reversal phase, if we're down on a secondary test and we come back and we get a real nice confirmation down here, okay, that's where I would be saying, yeah, I'm looking for this retest as a major opportunity for some kind of continuation. But I don't have that at my back. I got the completion of that first wave. That's it. And I think the same goes for crypto too. Look, everything I've said with crypto is just a reaction. And if you try to draw out or expand out, zoom out, if in doubt, zoom out, as they love to say, if you zoom out those charts, any major move anyway would be treated as a reaction. That's it for crypto. That's what I'm saying. I know if you don't understand the framework, let's dial it back. Look, go to harmonictrader.com and get volume 3. It's this book. No, it's this book. And look at towards the back of the book. Okay, look at the confirmation methods. Look at how we want to look at confirmation with the price action. That's definitely an important aspect of everything we want to do. Look at the trend line stuff. Okay, look at like some of the ways that we just want to assess how a reaction is over. I mean, this diagram alone is like so many of the patterns that shaped up in June. You had a beautiful zone, confirmation, real nice steady reaction trend line that violated and you rolled over. So something like this chart, that would be maybe 10 days ago, a week ago, where you broke the uptrend line from June, you're rolling over, you come back to the zone and retest again. It's kind of like this. And that's from ever ago. I mean, that chart's so old. It's probably older than some people in here. And look for the reaction back down to reversal. These are the things that are not in any other book. And again, these are just some of the additional strategies with harmonic patterns. This is the other idea, and it's important to be aware that, look, your first move is got a predefined target, and once it hits one of those two, we're done. That's where we are with a lot of the markets, and then have to come back down. Volume 3, that's the place to go. They've been closing down. She says, or you say you're in the, sorry, he says he's in the EU, and they're closing down ATMs, trying to prevent bank runs. Definitely take precautions, especially if you're in a place like Europe with the winter that's about to come, and it's certainly it's unknown what will happen when your leaders can't give you energy security. And this is something that I think, all of the weaknesses are going to be exposed here in the next 3 to 6 months. Thank you. Appreciate that. Thanks for getting the book. But if you are in a location where the scarcity of whatever food, energy is important, yeah, this is a time to be aware of those certainties, or uncertainties is probably a better way to say, because you don't really know for sure. But I would also counter all of that fear and doom, and it could get bad, to say that the markets will still go on. We just need to know where they're going to go. I mean, the markets traded all through world wars. Okay, most war, if not all wars, benefited from the wars. That's a whole other discussion. But really important to understand that the markets are not going to go away, even as bad as if it gets real bad. And I do think we're going to see how bad, if this return phase and the June lows fail miserably over the next 6-8 weeks. Okay, yes, much larger bad things will happen. Crypto will have a difficult time doing anything, but we have to wait and see. I mean, we're not there yet, but we are in the return phase to retest the summer action. Don't sleep on it. Okay, and I don't see a heck of a lot of bullish opportunities just yet. Not in traditional markets. On Thursday, I'll get into more of the crude oil market, energy market, commodities, because they need a second look now. There's definitely some issues there. And we'll look at interest rates, because interest rates are the key. If interest rates gets out of control, we will know. Listen, if things get out of control from a harmonic pattern perspective, we are going to have plenty of time, because we are going to see the patterns fail early and lead to a much larger realization. And you got me. Okay, you got me. So I wanted to bring this on for Thursday, but I'll just highlight it because it is critical. If you go to the bond market, I said this, I think it was Thursday. Go to the 10-year or the 2-year. They're both inverted. All right, there's the 10-year. That's up a lot for one day. That's a sizable move. Go to the weekly. There you go. Whoa, that's what's going on here, folks. So your 10-year yield, I said this last week, if it gets above 329, I thought that would get it to the hop level at 366. So that's what's going on. 365, 366 on this run, I would book it. That's a weekly bat pattern, but let me tell you, that's not what's going to scare me, okay? It's above 366. So let's say this gets to 366 and then just blast through to like 380. Yeah, then we're going to go a lot higher. And I showed you folks last week, what are some of those projections? Go to your all-time range, or even, look, let's just do it this way. What's the last ditch down? Like, there's the low, there's the A to B, and this last ditch, that's like a harmonic impulse wave, I call that, and gets you to a shark. 1618. I mean, these are all minimums. 886. Gets you to about 550. Somewhere 550, 550. I think that's a good number. On the 10-year yield. Is that what that was? OPEC cutting oil production? Yeah, I think it's, listen, we will be there. We will see it before it happens. It's going to blow through our numbers. And once it does, it's going to take on a much larger, become a larger creature than just a bat pattern. And those are definitely some of the things that would create the scenario for markets going lower, markets going much lower to the big targets I mentioned, like the 7,800 on Nasdaq, the Nasdaq 100. If you recall, check this out, okay? Last week we talked about this deep crab on a monthly. It's tough to see, but look, there's the deep crab, completed right there, had confirmation, went to target 1, came all the way back down, all right, down to the hop. This is a lot like the patterns we looked at recently, okay, that all had a pattern. They go to target 1 with a bearish pattern, and they are basically like, they're basically like here, and they need to get to here and do the full retest. And in the worst case scenario, they go all the way down to the hop level. I think that's, you know, I've mentioned a few situations that are like that. This is what could happen on that return phase, and this is where the true reversal did take shape. And your target 2, this is the 10-year yield on a monthly at 392, folks. That's your make or break forever. Like if you wanted to give this even a little bit more time, a little more price, if that yield gets above 393, gets above 4%, it's gone. And that's where probably the larger spike and larger disaster does take shape. But you got plenty of time until that comes together. Plenty of time. We should go to that more on Thursday. Would I say that the smaller bullish patterns being successful and not failing is a leading indicator, things that they're turning around bullishly? Listen, the back-to-back pattern scenario definitely helps. When you have, you go from one pattern, you like this pattern did. All right, you had a bullish pattern all the way down here that gave you a successful move, and then the bearish back-to-back that took shape. Well, that gives me a lot of confidence that you will do a full return. And then we'd want to wait for any kind of confirmation. I mean, you look at where your confirmation came in. Confirmation came in fairly close to the hop and fairly close to the low, even though this was interest rates basically going to 0 or 0.37%. The fact that you're in this phase to go down, you don't know where it's going to end until you get confirmation, until you really break out of that downtrend. It helps to target where the immediate move is going. All right, those smaller bullish patterns, let's say we had a bullish pattern on this retest, I would still say that's going to have to go more time. Take more time. What are we making new lows again? No, we're back down 100, back down to minus 100 on Nasdaq. But this is where we are. It's a Tuesday, first day of the week. A lot of things to look at. You are, especially after the last 10 sessions, it's been dramatic. You know, major markets have been straight down for the last 10 days. I mean, they don't say that, but I mean, look at the SPY here. You know, last 10 days on SPY looks like this. In 10 days, not a lot of time, but 3, 6, 9, there's day 10 right here. But keep an eye on it. Listen, I know it looks terrible, but the SPY actually shows us where we are. I mean, the SPY, again, we have this bearish pattern. It's a type 1 bearish pattern. It also set you off where you came up to target 1 off of the shark, and now you're coming back down. So that tells me, yeah, the bearish pattern here on SPY tells me we have to come into the zone, and I have to get confirmation. I have to get confirmation on these retests. Here is I said this when we started, and follow this for your software. If you're on the software, just follow the SPY. Whatever HSI is going to do day over day, the next few days, is going to dictate whether this goes down now or goes down maybe towards the end of the month. It looks like it wants to go down because now, I mean, this week, next couple of days, because we're slipping back into the zone, expanding, and you don't want to see that. Well, if you're short, you want to see that, but that's not the beginning of any kind of turnaround. If anything, that's going to, again, save more time in the trend of the predominant direction, which is there and here. And so, again, 381, sorry, 381 is a likely objective. 371 would be the absolute low end, but you start taking out 380, you get under 3,800 on the S&P. Yeah, then you're just gonna make a slamming run at the prior lows of June, which are back here. So I think one of the things people are confusing is that I'm saying, okay, I'm trying to show the retest of a bullish pattern against a bearish pattern and explain why that retest is so significant. But it's not, we don't even consider it a bullish thing, actionable decision, until it comes down a lot more and triggers some kind of bullish signal, bullish indicator. So you're not there. You're not. Amplified RSI turned back down with today's action and what's happening right now. Nasdaq down 130. Okay, S&P's down 22 now. It was down 11 when we started. Yeah, you're going to continue, and you'll probably continue into this week, and you make the run at the zones now. By Friday, maybe even by Thursday, we're going to be back down here making a run. And my issue with it is that until that comes out, as I said, every day you go into the zone, add another day or two before it can pop out. And if you're going lower in that zone, price will continue. It's just when you get down that low, that's how it just shapes up. But conversely, it should be a 1 day, day over day decline. So if we get like a 3-bar reversal or we get some kind of bullish candle, that would be an early sign. But we're not there yet. None of that is it. You are a whole bunch of things before you could even say that that is bullish in any way. I'm looking at the full retest concerned. Does it fail? If it fails, it's going to happen now. You guys have a Bitcoin. Bitcoin's back to 19,000. Yeah, no biggie. I mean, look, Bitcoin's even Bitcoin. The futures on Bitcoin still above 19.4, but it's not doing anything. There's Bitcoin futures. We were down on the weekend. Yeah, it's under 19,000 now. Okay. 19.4. All right, I'm going to fail it. What is this going to be, the first close? Maybe the second close under 19.4. That's your hop level on Bitcoin futures. That would be the first sign that something larger is falling apart. Keep an eye on it. We'll come back on Thursday with that, and we'll look at those Bitcoin futures, because you're hitting oversold now. You're oversold on Amplify, but going lower. HSI is hitting again. RSI, this is the first time you might have triple confirmation for the first time in a long time. But it would be like that. But it's not there yet. I mean, there's no bullish trigger there yet. You're retesting a bullish scenario, but there's no bullish trigger. That's what I'm saying with the other ones. Bitcoin, look, Bitcoin's just not as much. I mean, Bitcoin is someone saying Michael Saylor had to move his largest cold wallet to Coinbase, probably to dump it. I don't know. I don't know. And I've been saying this whole phase in the last 3 months is about Ethereum, not Bitcoin. And I would stay with that. I would stay with that Ethereum assumption. Definitely the macro market's going to hurt crypto. If the macro continues to slide, yeah, look at Bitcoin. All right, so there's Ethereum. All right, so I'm more considered. So we started out today like that with a real strong candle. Now what? I mean, this is the monkey ba 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 that it's been doing to me for the last week or more. That kind of a thing. Well, just draw your trend line. This should not, or even look at the prior day's low. I'm interested in higher lows as much as higher highs. Still need a close above 1650 to cinch the breakout and all of that. If we're going to go into something like this and have another bearish candle after kind of climbing upside down or climbing backwards, this is the way it seems like, I will keep an eye on it. Still 1430 is your catastrophe breakdown low. That fails, then yeah, you go all the way back down to retest. Let's come back on this on Thursday, folks. I know, it doesn't look pretty. Does not look pretty. I'm just trying to line up the framework, line up those situations that are 2 of 2s with confirmation, pattern completions. But the room for tolerance, yes, no doubt. There's very little room for tolerance. So if you see a big flush or a big breakdown from here, that's the second leg taking shape. Plenty of time. Come on back Thursday. We'll give away some books, have some more fun. As always, thanks for showing up, and go get them. Stay tuned to your charts. Get with Harmonic Trader, basic membership to get with the software, and then come on back 12 noon Thursday.